All right. Matt, the mortgage guy. In today's video, I'm going to talk to you about RSUs, restricted stock units, and whether or not you can use them to qualify for a mortgage. All right, Matt, the mortgage guy here, residential mortgage broker, bringing you up-to-date mortgage guidelines in an easy to understand format. I'm a simple dude. I'm going to keep it simple. If you'd like to reach out to me or my team, go to greatmortgagebroker.com. Let us know where you're at and how we can help. In today's video, it's probably not going to apply to a lot of folks, but for those that it do, hopefully it clarifies some things around restricted stock units. Otherwise known as RSUs, really common in the tech space, right? If you work for Google or Apple or Facebook or Uber or Snapchat, and you're an engineer or you've got a job like that, part of your compensation package is going to be more likely than not restricted stock units. You're going to have your base pay, and then you're going to have this, bonus income for the most part, which is restricted stock units. For those of you who don't know what restricted stock units are, like it sounds, it's stock units. And the reason why they use stock units and not stock is because until there's actually released to you, it's not necessarily a stock. But let's say you work for a publicly traded company like Apple, and they're going to give you 1,000 shares on a 4-year time frame, and you're going to get $250 per year over that 4-year time frame as they vest, right? Because there'll be a vesting schedule. Year 1, 250 get released to you. Year 2, 250. Year 3, 250, and whatnot. And at the time they're released, that stock price is what you're going to be taxed on. Again, just a mortgage guy, not a tax advisor. So any tax advice you want for RSUs, I'm sure there's tax advisors out there that can help you with that. But that's generally how it's going to work. And, there is 1,000 different ways these agreements are written. It can be performance-based. It can be time-based. I have seen some of the most complex structures for how somebody gets compensated. They might get restricted stock units as a sign-on bonus, and that's going to vest a certain way. They're going to get, a performance bonus based on their performance, based on company performance, and those might vest a different way. They might get something where, hey, if you stick with the company for 8 years, this is, the restricted stock unit vesting plan and how those are going to be dispersed to you. 1,000 different ways that they might come to you. But more importantly, I'm going to explain to you how you can use them to qualify. Most lenders, and all lenders are going to be different. That's why hopefully this video is a little bit clearer than mud. Lenders are going to allow you to use this, but they're going to vary in, how strict they are on how they calculate it. I'm going to give you the base guidelines that I see most often, right? If you're getting it, these RSUs, and it's time-based, meaning time with the company, they're going to look for a 3-year continuance, that it's likely to continue for 3 years. And that's really, something that people are hung up on. Like, how can I prove that? You don't necessarily have to prove it, but it can't be a case where underwriters think that it's not going to continue. Some of them actually restructure this bonus every 2 years or every 3 years or a longer time frame. As long as the underwriter doesn't see a reason why it would stop, you're going to be fine there. But if it's time-based, they're going to look at a 1-year history of receipt and make sure that that's documented. If it's performance-based, then they're going to look at a 2-year history of it, right? Because they want to see that, you're getting it, it's vesting, it's landing and whatnot. And the same thing where it's likely to continue for 3 years. I wrote down some notes on what lenders are going to ask for. Fully documented receipt of the RSUs, must still be employed by the company, got to have a vesting schedule for how it's going to vest. But the good news is that you're able to use this income. The trick is, how much of it can you use and how are they going to calculate it? I will tell you, in 2022, in the current market we're in, where a lot of stocks are getting beat up, are going down in value, what you're going to run into is the calculation that's done when these get distributed as shares to you is that they're going to take the 52-week low in some cases. Some will take the average stock price. Some will take the low stock price, and it's going to depend lender by lender. But if they take the low stock price and your stock is down 60% and you're, getting 1,000 shares per year on your vesting schedule, know that like 60% less in income is what the underwriter is going to expect for you to receive. There's all kinds of nuances where employers can rewrite this compensation plan and say, hey, we had a target to give you about 200,000 a year in restricted stock units. We realize the stock is down. We want to make sure that you're still compensated according to what we had originally planned on. So here's a top off. Here's some extra stock to make up for it, because the stock at its current valuation is only worth 82,000 and we're targeting 200,000 for you, right? And so all kinds of stuff like that. But if you are in the tech industry, if you are compensated with, both a base pay and restricted stock units, know that you can use it. The longer you've received it, the better. The more stable it is, the better. Get yourself connected with a high-level mortgage advisor. Make sure that you're not working with somebody who just looks at your W-2 and it shows up as W-2 income for most folks. And so they can just look and go, oh yeah, you made 442,000 last year. Yeah, we'll just give you about 40,000 a month. You qualify for 2.2 million. You're good to go. Have a nice day. Good luck. Happy house hunting. You want to get this thing reviewed. You want to get it in front of an underwriter. Most great companies nowadays will have either an underwriter review it or internal ops, which is as good as an underwriter, review the file and say, here's exactly how it's going to be calculated. Here's how much monthly income you're going to get, based on these different ways they're going to look at it, time-based, performance-based, if it's distributed as a stock, and do the calculation to say, okay, here's what we can use, and here's your income that's going to be actually used by the lender. Because I've said it on 1,000 other videos, and I'll say it again on this one. A lender telling you or issuing you a pre-approval letter, which is a PDF document, or a Word document saying you're pre-approved, is worth about as much as that paper that you can get 100 sheets for $1.50, right? Actually getting it to the finish line is a whole nother thing, right? And the more thorough your loan originator is, your loan professional is with the pre-underwrite and with the pre-approval, the more certain you can be that when you go into contract and you put a $30,000 earnest money deposit back, that you're in good hands and the loan will actually close. I've seen more of these come across my desk that are in process and falling apart, miscalculated up front or something like that. So make sure that, when you receive RSU income, you want to get yourself pre-approved, and you want it to be with a lender who's asking you for a significant amount of documents. If you're able to fill out application online, upload 3 things and get a pre-approval letter spit out, that should be a red flag. If they want the agreement for the RSUs, if they want the history of how it's been paid out and how it's been distributed over the last 2 years, if they're asking questions like that, you're probably in the right place. Hopefully this was helpful. If any questions at all, please feel free to reach out to me and my team. The best way to get us, go to greatmortgagebroker.com, fill out the form, let us know where you're at, how we can help. Hopefully this video is helpful. I think I'm going to link to a video I found on YouTube just talking about what is restricted stock units, in case anybody wants to learn about that, how they're taxed, and some other stuff that's not really in my wheelhouse. Hopefully this was helpful. Take care. And until next time, we gonna see.